Interest rates are on the rise, and that means big changes for the housing market. In this video, I'll explain how rising interest rates will affect Pennsylvania homeowners and buyers and what you can do to position yourself in this current market. What's going on, everyone? My name is Shawn and I'm the managing broker and owner of VRA Realty Alliance in Westchester, Pennsylvania. As you may have heard or read or saw on TV, interest rates are on the rise, so I'm going to explain how that's affecting homeowners and buyers here in our state. If you have purchased a home in the past 20 months or so, you have likely been through real estate hell. It has not been fun at all being a buyer and dealing with multiple offers, the stress of waiving home inspections, offering more than you ever would for a home just to be able to move in. But on the flip side, there have been some benefits to buying a home these past few years, and one of them has been the historically low interest rates. One thing that you can brag about in the next 5 to 10 years, if you stay in your home that long, is how you have a 2.9% interest rate. But the big question now is, how high will these rates go this year? Mortgage rates surged through the first quarter of 2022. The 156 basis points, or 1.56% gain, represented the fastest 3-month rising since May of 1994, according to Freddie Mac. With the pandemic's declining economic impact, inflation running at a 40-year high, and the Federal Reserve outlining an aggressive policy plan, interest rates could continue trending upward. Selma Hepp, the deputy chief economist at CoreLogic, has said, with much uncertainty in the economic outlook, mortgage rates are likely to continue to creep up over the year and the next few months, particularly as the Fed's rhetoric around reestablishing price stability continues. There is so much uncertainty out there about what will happen next with the economy, inflation, Federal Reserve's rate hikes, and this is all causing mortgages to continue increasing. At the same time of interest rates rising, home prices have continued to rise in Pennsylvania, especially here in Chester County. So in this current market, in our current market, the average sold price in Chester County in January was $496,000, and that has increased to $526,000 in April. That's a staggering difference of $30,000 in 4 months. After the biggest surge in mortgage rates in 40 years, houses are now less affordable than they were at the peak of the 2006 housing bubble, which is likely to dent home sales and cool the pace of home building this year, a Fannie Mae economist said this past Thursday. So essentially, what some experts believe is that home sales will slow down for the remainder of this quarter and next. Now, I know that there are many people who believe that we are in a housing bubble, similar to what it was like in the Great Recession of 2008 and 2009. But the fact is today, homeowners have a significant amount of equity in their homes, which is a vast difference from before. When people were buying in the early 2000s, some of them were mortgaging their homes up to 125% of the actual value, which put them severely underwater when the market crashed. And I can't say for certain, but in my professional opinion, we are not in the kind of position like we were before. If you purchased a home in, just say, in Chester County, right, in early 2021 for $300,000, that same home could be worth up to $350,000 or more right now. So you can see that sellers have a huge advantage and they aren't in the same boat as they were before. So what does the rest of this year hold for us in terms of buying a home? If you look at the fluctuations of interest rates over the past 4 decades, the average rate has been 7.78%. So even if rates right now are in the mid 5%, we are still experiencing historically low rates, which makes it a good move to try and capitalize on them. I will be honest, the one thing that does worry me is the continuation of home prices rising. If you have been in the home buying market for the past 6 months, your buying power has decreased due to rising interest rates and home values. For those who have been waiting for the market to cool down, you have really missed a great opportunity. I don't have a crystal ball, but based on what I am seeing and learning is that the inventory crisis will continue for the foreseeable future. There is still such high buyer demand and not nearly enough homes to support them. With the inventory being so low, rates continuing to rise, home values continuing to rise, and demand still being so strong, we're going to be in this seller's market for the years to come. One thing I do believe is that rising interest rates will help to moderate the insanity that we're seeing today. Instead of homes receiving like 10 to 15 offers per listing, maybe that'll cool down to 4 to 6 offers. Home values are going to continue to increase due to a lack of inventory, but I don't believe they will increase at such dramatic levels. The rising of rates will also push some buyers out of the market that have been looking for a while because they just can't compete anymore, right? This will hopefully open up the door to those who can afford to stay in the race and give you a better shot of finding the home that you want. I do also believe that you, as a buyer, will have to continue to be creative with your offers because the competition is still extremely fierce. It is all about setting expectations with yourself. You will most likely not get everything on your list, so being able to be flexible with what is available is key. At the end of the day, it is in my professional opinion that we will be in this kind of seller's market again for a long time to come. This doesn't mean that it's impossible to buy a home, and I want you to really understand that. Rising rates will definitely affect your buying decisions, so whatever you do, just make sure you do what's best for you. I've said this before, if you don't have to buy a home right now, then you probably shouldn't put your hat in the ring. If you're forcing the situation, that is when buyers tend to make the wrong decision. So if you're not in a position where you don't have to buy, then you probably should sit it out. If you're looking for investment properties, I would say that it's always a great time to buy an investment property. You can always find a deal out there. You just have to know where to look and who to talk to. I hope this information resonates well with you. If you have any questions about what's going on in the market, always feel free to reach out to me anytime. You can click on the link below, schedule an appointment, or text me anytime at 267-808-0574. Look forward to speaking with you soon and have a great day. Take care.